there are two other classes of assets, digital currencies like stable coins, and there are also digital securities that are issued by entrepreneurs and companies. The regulators are going to shut down the digital securities. There's not really any support for them. And there's not any support for digital currencies either. They don't want large amounts of dollars to circulate outside the control of the US banking system. So of the three asset classes, the one safe haven for institutional investors that has the most regulatory support is Bitcoin as that king digital commodity. I expect that the rest of the crypto industry will continue to rationalize, and these other assets will gradually be decapitalized over time.
The executive chairman of business intelligence and analytics company MicroStrategy and a fervent proponent of Bitcoin, Micheal Saylor, thinks the end is very close for the rest of the cryptocurrency market, both inside and outside of the United States. The well-known Bitcoin community figure Saylor predicts that the current regulatory crackdown on what he terms crypto securities and currencies will only get worse until these projects leave the US and begin the unavoidable descent into total decapitalization. Saylor anticipates that the entire process will move much more quickly than anybody anticipates, which will encourage institutional investors who are now holding back on investing in Bitcoin to get over their reservations and allocate a portion of their enormous portfolios to the top digital asset. Saylor's evaluation of the situation is in line with some of the signals that US regulators have been providing ever since the FTX collapsed in late 2017. A few days ago, Gerber Grewal, the director of the U.S. Securities and Exchange Commission's SEC Division of Enforcement, claimed that the non-compliance that underpins the cryptocurrency business. Grewal claims that after trying to regulate the cryptocurrency market carefully and gradually without any luck, the SEC has to alter its approaches in order to regulate the sector effectively. The regulator thinks there will be many more multi-billion-dollar collapses in the Bitcoin sector, because there are still unregistered securities offerings. At a New York event earlier this week, Grewal said, "Even if you came up with a bespoke rule set, you have an entire industry where the ethos is built around non-compliance. Typically you'd also see compliance, but we're not seeing that in this space, so we had to change strategies." The regulator has changed strategies and is now going after several crypto-related firms and products, the most significant of which are his most recent twin lawsuits against crypto giants, COI. A hearing on SEC oversight will be held by the House Financial Services Committee on June 22, but it's possible that this won't do much to stop the regulator's vendetta against the sector. In a significant way, the outcome of the regulator's case against Binance and Coinbase will also determine whether and how the cryptocurrency business will be able to operate in the future in the United States. Micheal Saylor claims that investors in Bitcoin don't need to be concerned about regulators, the numerous intriguing and outstanding features of the asset, or the durability of the underlying network. The executive chairman of MicroStrategy discusses Bitcoin's many benefits as a long-term investing tool, and why it is the ideal asset to get out of the intrinsically fraudulent fiat system in a recent interview with Bloomberg. We will now show you excerpts from the interview. Please watch, like, and share this video.
Well, Bitcoin represents the only universally acknowledged form of digital property or in the world. So if you're looking to own a piece of property that you can move to 100 different countries where everybody in every country is going to want it, and if you want a piece of property that people will want in 100 years, Bitcoin represents that universal global asset. There's no building, there's no stock, there's no company, there's no commodity that will last 100 years that you can move from country to country. So for global citizens that are looking for wealth preservation over the next 100 years, and they're not quite sure about the economic policy of any country or about where they'll be, and they want something scarce, desirable, that some affluent person is going to want to buy from them no matter where they end up, Bitcoin represents that asset. Well, I think that there's universal acknowledgement that Bitcoin is the king digital commodity. It's an asset without an issuer. And so for that reason, the regulators in the US aren't bothering it. I think the key to keep in mind is over the past 2, 4, 6, 8 years, Bitcoin is outperforming gold, silver, bonds, all currencies as a monetary inflation hedge. So if you live in the United States, the US dollar has been losing 7% of its value every year for 100 years. And over 100 years, you lose 99.8% of your value if you don't switch to a scarce, desirable asset. But if you live in another country, Turkey, Argentina, etc., in many cases, I think the Turkish lira has lost 96% of its value against the US dollar in just 20 years. So the real key is to switch out of the weak currencies, whether it's the lira, the Lebanese pound, the Argentine peso. But switching to the dollar is only a short-term solution because holding the dollar more than a few years will cause you to suffer monetary debasement at the hands of that currency. So Bitcoin represents a way to buy a property that's going to go up in value. It's going to appreciate faster than the monetary inflation rate of either the dollar or local currency. And the other thing that's very appealing about it is you can take custody of it or place it with any number of international custodians. And of course, you can't really easily take custody of any other asset. So if you want to eliminate counterparty risk that comes from having all of your assets with a bank, or having all your assets in a single country, or all your assets denominated in a single currency, Bitcoin is a way for you to exit economically from that system and from those counterparty risks. The thing that backs Bitcoin is 400 exahash of digital power. To put that in perspective, that's as much power, energy, as the entire US Navy uses in its fleet, about 12.5 gigawatts. And also, it's a fleet of 5 million Bitcoin ASIC miners spread everywhere in the world that generate so much hash rate that if an AI took over every computer on Earth, all the smartphones, all the computers at Amazon, Google, and Microsoft, all of those computers couldn't dent the Bitcoin network. It's an extremely powerful digital energy network. And because of that, you don't have to put $1 billion in a bank that's run in Lebanon or Argentina or the US or Turkey. You can put the $1 billion onto the Bitcoin network, and the Bitcoin network is nation state resistant. If all of China turned every computer against the Bitcoin network, they couldn't stop it. And so Bitcoin represents a new way to store your assets, and in fact, the most secure computer network in the world. I think the key to keep in mind is that every citizen of the world needs 3 types of money. They need local currency, like you need the Turkish lira in order to pay your taxes and buy things locally. They want the world currency, the US dollar, to buy things internationally. And then they want a property that they can give to their children and their children's children that will last 30 years or 60 years or 100 years. Bitcoin represents the property. The US dollar represents the world reserve currency. And then your local currency is determined by the jurisdiction you live in and what your local taxes and your local expenses are denominated in. You don't need to replace the local currency, nor will you. And it's not going to replace the dollar either. What it's replacing is that building or that farm you are going to buy, or that company you are going to invest in, or a bar of gold. And compared to that bar of gold, which is not going up in value in dollar terms, Bitcoin is actually outperforming by a factor of 100 or more. So Bitcoin represents that long-term asset, not your checking account or your near-term local payments. We live in a world today where AIs could spin up 100 million fake Micheal Saylor accounts. And there's no cost to create a Twitter account or create another fake account or create an email account. So it's important that we actually have some way to anchor your account into cyberspace such that you have some substance. And the approach with Bitcoin is to take your credential, say your identity, your public and private key, burn the public key onto the Bitcoin blockchain, which is the most immutable, incorruptible, indestructible, immortal database in the world, and then use your private key in order to sign your transaction. So if I wanted to digitally sign this video interview to prove that it was me, or if I wanted to digitally sign my Twitter account, or my WhatsApp account or an iMessage account or my email to prove it's me. I could use a private key that's linked to the public key on the Bitcoin base layer. And as I said before, if you wanted to corrupt that database, you would need an entire nation and you would still fail. And so whatever's on the Bitcoin base layer will be there in hundreds of years, even long after nations and companies fail. That's why Bitcoin represents this immutable form of truth. And it's more important than ever to have that veracity, because an AI could actually be a better version of me. It'll work a million times harder and there'll be a million versions of them. And you're not going to be able to tell the difference unless you've somehow registered your cyber credentials on an indestructible, immortal, incorruptible database.
If the exchange does not abide by these rules, obstruction-related charges will be brought against it. What do you think about Binance and the SEC agreement? Do you believe that this establishes the framework for how the rest of the sector will be governed in the US? Please leave your responses and criticisms of Micheal Saylor's interview in the space provided below. Also, be sure to click the like button, subscribe, and to post notifications for additional videos. Thank you for watching.